So qualifications for office. This is absolutely, definitely in your future. To qualify for office, municipal property tax assessor in any Maine city, town, plantation, or primary assessing area, an individual must be at least 18 years old, a resident of the state of Maine, and a citizen of the United States. 30A, this is when the other titles come into effect, municipal and county government. 30A MRS section 2526. Qualifications, if you happen to look in the index, I don't know if it's under Q or A for assessor qualifications. Like 30 A's in this book, and Bill didn't put it in the other book in his infinite wisdom. It's in the other book. Qualifications of assessors and collectors, volume 1, 30A 2526. And it is it in volume 1? Doesn't say so on the front page.
Volume 2.
They were all in section order.
I didn't have anything to do with restructuring this book. I'm not state employed.
Page 185 in the second volume.
That's what I figured. So his index is wrong. There's
185.
They don't go in title order?
No, not in the second book.
We'll work on that. Things should go in sequence.
We'll come back. No.
I'm likely I'll be on board. I think I cleared up my security issue.
They're not in sections.
I just signed something to,
Oh, I got it. Who's gonna know what titles are which?
I get why.
Oh, the title, those are titles.
But how would you find it in the book?
Have that
Because they're
different
not by
numbers. These
page
don't go in
number,
order.
by section number in the index. And then there is
You gotta look at the titles. Got it. Then you gotta know which titles are.
Yeah.
if you know what section it
You know
relates
which
to.
book it is. What book is it?
Yeah, so-
So one is
Yeah.
36.
Yeah.
So book 1 is
Book one is
36.
36. Two is. Okay. In title order. Okay, one section. Okay, it's just that that's not title 36, that's.
So is everyone comfortable with finding qualifications for assessor and collectors and not following the directions and going to book 2 instead of book part 1? Is that what it said?
It is.
Back to the qualifications. Anyway, you can find it in multiple ways. You know it's in 38 cities and counties, or you can look up the index, but that is absolutely in your future. In some form, there'll be a question. They may twist the question a little bit, but just read the question. They may ask you if this person could be. And if they're a citizen of Canada, do they qualify? Even though they are 18 years old and they live in the state of Maine, they reside here?
But if they're dual citizen,
Well, yeah,
they would, right?
yes. Yeah. But if they're an alien, no.
So what would happen, going off of this qualifications, if legislative body didn't say they were gonna have a single assessor 90 days prior?
Pardon me?
So it's just a town may determine at a meeting of its legislative body held at least 90 days prior to town meeting,
Mhm.
whether a single assessor will be appointed under subparagraph 3.
Oh, yes.
Elected to the office of
Yeah.
assessor. Like,
Yeah, elected to the office. You get elected as a selectman
Yeah.
if there's no charter for a single assessor in the town, or the town doesn't have a single assessor, you are assessor slash, a selectman slash assessor.
And so if you have an assessing
Agent.
agent, they're just an agent, they're not the actual
You,
assessor.
the board actually signs the
Yeah.
commitment and makes final decisions. They usually go on the advice of their contract
Yeah.
assessor, or why spend the money. Not, some of them like to argue, certain boards get there and go, wow, especially the new ones are poor, they try to influence, exert their authority sometimes. Jim can probably expound on that with interesting stories, but, yeah.
What would happen in a case like that if it was found out after the fact that one of the assessors wasn't legally qualified? It says the others cannot assess a valid tax.
That would go into the, so he would not be an assessor and there'd be a vacancy, and the town would have to deal with the vacancy and the,
Okay, so the others would do the vote and that person would be eliminated.
yeah. Yeah, if he didn't qualify.
As long as he didn't sign anything.
Correct.
Or vote.
Or, oh, really, even, it's, oh, yeah, even
Yeah,
a
he's,
vote.
he's in
Wow,
town,
yeah.
he can't, yeah. Cannot vote. He shouldn't even be present at the meetings,
Right.
because he has no authority.
I check to make sure that they're all sworn in. And
Mhm.
if they're all sworn in, I'm assuming the town clerk has certified that they are residents of the town,
Yeah.
if they're sworn in.
Yeah,
So I
you-
don't go I don't check their wallet to see how old they are or anything. I'm assuming it's to be.
Believe me, you do not want to cross town clerks. You want them as friends, because you want to make sure you're sworn in, because back in the 80s, there was an assessor in a very large community in southern Maine, Kennebunk, to be exact, and the assessor got in a little conflict with the town clerk. And the town clerk says, smarty pants, says, you were not sworn in, and you've already committed the taxes. This is predated
Computers.
computers. And so we have an invalid assessment commitment, because you were not properly sworn in. So the book at that time was probably, yay thick. 10 taxpayers or lines per page, maybe more. So the assessor got properly sworn in. He had to have a stamp made, stamp the commitment book page by page or line by line, and had to supplement the whole book.
But that town clerk wasn't doing any of the due diligence of getting the guy sworn in. The town
No.
clerk is at
I was
fault
just
there.
gonna say.
Don't
Well-
worry, they're no longer there.
Yeah, okay, okay. I would fire that guy immediately if he tried to pull something like that.
Yeah,
But they were elected, so what do you do?
yeah, they were elected,
Wow.
town clerk, yeah.
Well, very interesting.
Well, there may have been more to the situation. I mean, this personality conflict anyway, but
Mhm.
it just behooves the assessor to be sworn in and be friendly to the town clerk.
You have to be on the same team.
Yeah,
Absolutely.
Yeah,
exactly.
absolutely.
There's no sense in battling things. Some of the town clerks have been there for a long time, and change does not come easy to some people. And so, even though you may be right, you may have to compromise a little bit. Okay, for conflict of interest reasons, municipal tax treasurers and tax collectors may not, for a municipality in which they serve, it may not be the assessors. Doesn't make any sense. I mean, that's an obvious conflict of interest, that you assess the tax and collect it also. So that is pretty straightforward as it gets. And there may be a question, something like that in the future. I'm not, when we go through the review, I'll be a little bit more specific, but Furthermore, judges and legislators may not be assessors. This is because assessors, as agents of the state, exercise their authority as members of the executive branch of state government. In Article 3, Section 2 of the Maine Constitution prohibits any individual from exercising political authority in more than one branch of government, executive, legislative, judicial, at any given point of time. So, other people that cannot be assessors in a municipality, judges and legislators.
Town manager.
They had a couple of legislators that got elected, and they had to be reminded when, no, you cannot act as an assessor also, so. Okay. Selection of assessors. City assessor, unless the city charter provides otherwise, city assessors and their assistants are chosen on the second Monday of March to serve for 1 year. The city charter specifies the number of assistants to be elected. However, regardless of the city charter provisions, the city council may, by ordinance, provide for the appointment of a single assessor for a term not to exceed 5 years, which most of them do. Town assessors, at the meeting of the legislative body held at least 90 days before the annual town meeting, town may decide to appoint a single assessor or elect a board of 3, 5, or 7 assessors. Most boards consist of 3 members. There are some towns that actually elect a separate board of selectmen and a separate board of assessors, because in some towns they perceive that it's 2 different functions and they don't have time. But that's been going by the wayside a lot, simply because towns do not like, they get in political conflicts or personality conflicts. The selectmen in the town sometimes like to take control of the assessments, and they have no business. If there's separate boards, the Board of Assessors are the Board of Assessors. The selectmen go through the budget process and hand the budget to them, but they cannot interfere in the assessment function or interject in the assessment function.
When the Board of Assessors meets, do they have to allow for public comment?
Yeah. Yeah.
So you could still be a selectman and go to the Board of Assessors and speak at
Yeah.
public comment, but
Yeah.
only as a private individual?
Yeah. Yeah, I mean, they can, it behooves them to get along, but sometimes there is a conflict, especially who develops the mill rate because of overlay or something like that, or, but usually it behooves the Board of Assessors to listen to the selectmen, so there's no conflict within the town, harmonious. Environment is best for any municipal government. Transparency is also paramount in government. Okay, the elected Board of Assessors may be chosen by written ballot at an open town meeting, 30A 2528, in a town fewer than 4,000 residents, according to the most recent census. The election shall be by majority. To win, a candidate must receive more than half the votes and cast in the town of more than 4,000, or a town of any size population, which uses secret ballot. Election by popularity, plurality, is the candidate with the most votes wins, which is the most common case. Okay, in a town that has not elected a full Board of Assessors, selectmen themselves will serve as members of the Board of Assessors. The test does not go into this detail. Qualifications, there may be a question or two. Okay, plantation assessors. Plantations are the simplest form of organized municipal government in Maine. Consistent with the conception of plantations, the transitional forms of government, many plantations have become incorporated towns, many have not. But the statutory provisions relating to the method of election and term of office of assessors is 30A 2526(5). Applied to the plantation assessors, provided the plantation is not a part of a primary assessing area that does not exist. Organized plantations elect 3 assessors at their annual town meeting. If money is raised for repair of roads, bridges, the plantation assessors choose 1 or more road commissioners in the same manner employed by the town selectmen. So in plantations, the assessors run the town. They're the assessors and the overseers of the poor in plantations. And you don't necessarily have to be a resident of that plantation to be elected an assessor. But you do have to be a U.S. citizen. Lewiston is the only municipality currently designated as a primary assessing unit. In a primary assessing area, the selection of the assessors is governed by the municipal ordinances and charter. 36-471, since the enactment in 1973 of 36 Chapter 104, no group of municipalities has elected to be designated as a primary assessing area. This, back in 1970, they were allowing for consolidation, a primary assessing area. But there were 5 or 6 municipalities that chose to be primary assessing unit until they get at odds with their current assessor, who has, in a primary assessing unit, the assessor has tenure. And it's tough. You have to get out of the primary assessing area to rid yourself of the assessor if you don't like it. Case in point, it was Bangor a number of years ago, and they were a primary assessing area and or unit, and they got at odds with the assessor because they wanted them to immediately start chasing sales information and boosting the value to distort their ratio somewhat, and he resisted, and they didn't like that, so, which was his prerogative. He was just following the Constitution and just value, but the council saw it differently. He was being insubordinate, so. They chose to invalidate their status as a primary assessing unit. Assessing agents. I think, Jim, you've covered that. Assessing agents has become common practice for municipalities with elected boards of assessors to employ individuals to provide professional assistance in the administration of local property tax. Myself and everyone else at Maine Revenue Service, if a small municipality is struggling with being selectmen because they have full-time jobs and they're not trained or do not want to assess property, we've always strongly suggested or recommended that they hire an agent. There are many agents throughout the state that have multiple towns and have enough work to make a very good living. Right? Yeah. And there'll be more because most of them are charter members of the Grey Legion, as myself, and they'll be on the cusp of retirement here pretty quick. There are many small towns that with the complexity of, and a lot of selectmen, when they get elected in a town, really hate because they feel, oh, God, I know this situation and we shouldn't value them that much, but it's in conflict with the Constitution. And I said, it's an easy solution. You wanna, says, hire some professional. Hire professional, I mean, they'll do things correctly because they wanna remain employed and their certification is valuable to them, invaluable. And so that's the easiest solution for you. But some towns just too tight with the purse strings at times, but as larger towns, mostly if they don't have a full-time assessor, they either have an agent or a part-time assessor they share with somebody. That's becoming the trend. That's what primary assessing areas saw coming. And the actually legislature gave a vehicle to do that back in the mid-70s. And not a bunch of towns regionalized or anything like that until recently. I mean, the past 15 years it's become common practice for a couple of towns to share an assessor. Biddeford and Saco currently share one, South Portland and Westbrook. Up until recently, Gray and Cumberland, but now they're different. They split because the assessor had enough work to do in Cumberland. But Cumberland County Assessing Office, actually at the county level, handles 4 or 5 towns down in Cumberland County, Falmouth, Yarmouth. Pardon me?
I think Gorham just went over to them this year.
Yeah, Gorham had trouble finding an assessor, so Gorham went over. And it's, so far it's worked out. There's been a couple of glitches, but till the councils decide, or some council decides, well, we need more presence of the assessor in our community, that will continue to be a practice until it gets overwhelming. But so that's other parts of the country. New England is local control, and other parts of the country, if you've visited or lived in other parts of the country, most of them do countywide assessing. Some actually do statewide, but most of them do countywide, and they elect a county assessor and all that, and sometimes it can be corrupt and sometimes it can't, but it works in most communities outside the original colonies, but independent New Englanders, they love to have local control, and regionalization has come tough for a lot of communities. But it's a matter of economic scales, supposedly, that a regionalized assessing like Cumberland County works for some towns if they're all on the same software. But usually it behooves them to be on the same software.
I think we're lucky right now because the economy is cranking right along.
Yeah.
And when it shifts and things go south and the values start to drop, the town assessor that's sharing a couple, 3 towns is now going to get really busy because of demands on time and such. I think it's just a short matter of time before sharing assessors is going to be problematic.
Yeah. Okay, and although the law does not require assessors agents to be certified by the state, most agents are certified. They're not doing it full-time. You do not have to be certified. You do not have to hold a CMA.
What if you're doing it full-time, but not full-time for any particular town?
I have to be certified because I'm more than 75% of my time a week.
Yeah.
So if you're more than 3 days a week, regularly doing
Regardless
this,
of
you've
what
got to be certified.
town,
Yeah.
it's just cumulative. Okay.
Yep.
Yeah.
Makes sense.
Assessing agents, as I've spoken, have no actual legal assessing authority. There's a difference between assessment and valuation, as Jim has explained. And are not required to take an oath of office. Local assessors must remain informed about the methods used by hired professionals, and they must use their local knowledge to check the accuracy of and appraises Recommendations. After being, oath of office, after being legally qualified and properly selected, it is imperative that each and every assessor be sworn into the office as an assessor before assuming the duties of the office. The law which requires assessors to be duly sworn is satisfied when the assessors take the oath faithfully and impartially to perform the duties assigned to them. If no assessors have been elected, the selectmen are to act as the assessors. The selectmen must be sworn in to the office as assessors, even if they've already been sworn into the office of selectmen. County commissioners appointed assessors must also be duly sworn. The oath may be administered by the moderator at an open town meeting, by the municipal clerk, or by any other authorized by law to administer the oath, including a notary public, venomous justice. If a member of the Board of Assessors is sworn in by a person who is not authorized to administer the oath of office, and any tax assessed by the board is invalid. Quickest way to invalidate a commitment is the example I gave you in Kennybunk. If you're legally appointed and you have the qualifications and you have the oath of the office, you're sworn into the office, and you tax something that is not, you overstate the school tax, let's say, in the example I gave you earlier, your commitment is still valid. But if you're not sworn in, like the gentleman in Kennybunk, your taxes, your whole assessment is invalid. That's why you had to stamp the book and supplement the whole book and send out new tax bills. Which were the same as the previous tax bills, but they had no authority. They were just invoices. And there's some examples of the oath. Constitution recommends this oath, which is the one that's widely used. Compensation. Primary assessing areas, municipalities are required to pay assessors a reasonable compensation and actual expenses incurred in complying with the requirements of Title 36, included costs to attend meetings, schools, and which offered by the state tax assessor. Many towns ignore that.
So would I.
What?
So would I.
Yeah. At its annual meeting, if the town fails to fix the compensation for assessors of each assessor, be paid $10 per day for every day actually and necessarily employed in the service of the town. Liability of assessors is legal responsibility or obligation to be held accountable for wrongful losses or damages that someone might suffer as a result of the assessor's actions. As a general rule, property tax assessors are responsible for their own personal faithfulness and integrity. Assessors are not responsible for any tax that they are by law required to assess. That liability rests solely with the municipality whose benefit the tax is assessed. However, provision 702 afford no protection to persons who perform the duties of office assessor without having been elected or appointed as an assessor. Such person would be personally liable for any acts of a collector to whom they have issued a warrant for collection of taxes. Okay, none of these penalties are in the test in the future. Just, these don't get imposed all that often. Freedom of access law. Assessors must be familiar with Maine's freedom of access. The provision ensures that virtually all assessment records are open to the public for inspection. And of recent, I don't know if it's in here, but recently all records should be available to the public unless you're holding something that you signed a confidentiality agreement with, like a paper mill's income stream, something, and they want that held confidential. You cannot disclose that to the public, even though that's any part of the assessment record may be subject to being confidential, other than the assessment itself. The methodology of come up with the assessment may include something that's confidential. The most recent thing that is not open, which was always open, was veterans exemptions. They should be placed in the vault or out of public's reach, because in the past they've always been the public reach. The DD 214 has your social security number on it, unfortunately, and that's always been with identity theft today. Years ago we didn't have to worry about this, but today it's very common. If someone gets a hold of somebody's social security number, it's going to be abused.
Actually combined with your date of birth.
They may file your income tax before you do. So those records should remain under lock and key and are confidential. The application itself, it doesn't list their serial number, which the new ones should not, but the old ones do. The DD 214 has their social security number on it, so those have to remain confidential and locked up. Tree growth management plans, if they're in your possession, are also confidential information.
Is it okay to keep them in the vault along with the veterans records, or should they just not? I've been told a couple of different things, like we shouldn't even have them, we're supposed to destroy them. Or is it okay to keep them in the, just to keep them in the vault?
You're supposed to return it to it after you've, yeah, you can have them, if they're kept confidential, that's fine. Usually it's open for inspection from the assessor and also Maine Forestry Service, but other than that, they are strictly confidential and should be returned, just in case you go out of office, your successor comes in and goes, well, this is interesting. Yeah. And brings it home to his family to, this isn't right. Yeah.
What was your question?
Just, along with veterans exemptions, even though they have confidential information, they can be kept in the, he said they can be kept in the vault.
Right.
Tree growth, that's not supposed to be kept in the vault, it's supposed to be returned. Tree growth is,
The forest management plan
yeah,
itself.
excuse me, specifically the forest management plan.
Yeah, it's proprietary information, supposedly, for these commercial wood harvesters. They're in competitive, mode with other people. For your 90% of your tree growth applications are under 25 acres or something like that. There's no proprietary information in there that would benefit anyone.
Well, we have Irvings and Six Rivers and all sorts of stuff, so I can understand the corporations not wanting to have that information.
Yeah,
I send them all back.
yeah.
That's going to be my first thing when I go back, is go through, pull those things, and just either destroy or send them back.
If I
Yeah.
don't have them, I don't have to worry about it.
That's right. Out of sight, not my responsibility. I returned it.
I need to know where to find them.
It's sometimes by certified mail.
Yep.
Okay, miscellaneous liabilities, certain types of misconduct and neglect and duty on the part of an assessor could result in liability. For example, abatement denials, evaluation schemes, which intentionally discriminate based upon the owner's race, creed, national origin, stuff like that. That's Civil Rights Act. It doesn't happen all that often, but we did have a case of an assessor with a scheme of lowering commercial property. And collecting portion of the lowered assessment and pocketing it personally. He's also in federal prison, so, yeah, it's extortion. Yeah. That was a scheme. I don't need to go into any other detail.
I'll tell you after 4:30.
Yeah.
Keep them moving.
Yeah. Civil rights, powers and duties, okay. Powers and duties, property tax assessors in Maine occupy a unique place in the governmental structure, fulfilling the dual role of municipal official and agent of the state. Municipalities cannot exert any legal control or actions over the municipal assessors. I've already gone into that, where the legislature won't surrender the power of taxation. Since they instead are subject to the supervision and control of the state tax assessor in the discharge of their official duties. As I mentioned earlier, as in your assessing role, you're an agent of the state. Assessors are required to obey all warrants received by them and to govern themselves by 36, 301 through 329, and 501 through 1121, 36 MRS 701. Okay, assessment. The definitive duty of property tax assessors is to annually ascertain accurately as possible the nature, amount, and value of taxable property as of April 1st, and to estimate and record separately land value exclusive of buildings for each parcel of real estate in the municipality 36708. In no other capacity is the assessor's integrity more important. So your nature is to discover, list, value, and assess property as close and to just value as possible. And in the valuation book, you're to record land and buildings separately for the value, so people can determine whether their land assessments are equitable and their building assessments are equitable. But there are court cases that when it gets appealed, as long as the total is correct, they are in line, there's seems to be no issue, but you need to record them separately. We've gone over the obligation of assessors. This week is redundant in most cases. I mean, to assess all property fairly, equally, and according to just value. Property taxes in Maine are assessed annually on the basis of their status, April, property as of April 1st. Look up tax year in your index and see what you find. There may be a question in your future.
Question for you about the April 1st. In Perham, there's still like 5 feet of snow on the ground on April 1st. Was it acceptable to hold up, like to do your walk around later than
How
that?
many things are being built during that time frame?
Right, that's what, I'm just making sure. We've said April 1st and we actually tried to do April 1st and it was almost impossible.
Yeah, no, it's as close to as possible.
Okay.
2 pairs of glasses on. Yeah, I mean, you can assess it before April 1st or visit it, but its status is of April 1st.
Right.
If you have a lot of new construction going on, it would behoove you to check and on April 1st, the status of it, because it may be, there's completion charts for construction. I would subscribe to, or prescribe one of those, or subscribe to that methodology, because it'll state the components in the interior, exit, and what the average rule of thumb process of completion. Because if there's a new house being built and they've just got it framed, maybe the windows, or they've got it sealed up, they have no exterior on it, they have no interior finish, they've just got it protected from the elements, it's not a complete house, and you shouldn't assess it as that April, not
Okay.
April. So if you have a vacant piece of land on April 1st, and a mobile home moves in April 2nd, in a good year, or a year that we had less snow, that's mobile home is not assessable.
Right.
It's not taxable, I mean, because it was there on April 2nd, so.
If you don't show up till May, you don't know that
Right.
that wasn't there on April
Yeah.
1st.
So, I mean, those are the pitfalls, and a lot of towns in seasonal resort areas with RV parks, especially today, the amount of RVs that sit yearly in some of the larger campgrounds, Old Orchard, Wells, all through the Route 1 coastal corridor, there's a huge amount of value that sits there year-round.
And not excised, and if it's not excised, then
It's got to be excised in the town, I'll get to that, so it's a little known. You can excise a mobile home, but, I mean,
It's under-
register a mobile home, but the prelude to registering your camper trailer or your RV is to pay the excise tax. So you can avoid personal property tax if it's registered. But if it's a non-resident, which many of these are in southern Maine or in all of your campgrounds, it's still taxable.
Because
It's
they're not
left
paying
in
that Maine state
your
excise
property.
tax.
Right.
If there was a fire, who was gonna respond to it? Their hometown from Massachusetts? No, so they are responsible for personal property tax, and it gets a little confusing. Some campgrounds get, and most assessors ask for a list of owners, that way, you know, it can be friendly. And if they don't, you're entitled to tax the person in possession, and that would be the campground owner.
Okay, so what if, you know, an older fella, he has 2 or 3 old campers on his lot, and, oh, well, I might use this one for parts or whatever, but there's still, you know, there's 3 campers sitting out in the yard that could probably be registered and taken
Yeah.
on the road by act. What do you do?
The personal property, they're not
the
exempt.
valuation is probably really low if he's talking about properties and
Yeah,
parks. It's not
you may want to put a value and use on them if the chipmunks are living in there and everybody else, so the raccoons are having heyday, you know, if there's no food, they're not gonna be in there, but the chipmunks will, and the squirrels, but, yeah,
When you start getting into that territory, you're covered with junkyard regulations from the
Yeah.
state.
yeah, but over 3 or 5,
I think it's over 6.
what?
6 vehicles.
Yeah.
Maybe just a.
I have
you know,
6 vehicles, I have 6 registered vehicles in my
Unregistered,
yard.
it's specific-
It's
specifies
gotta be
unregistered.
unregistered, yeah.
No, I'm talking just a couple campers. And
Yeah.
then, you know, maybe to be used, you know.
Pick your battles.
Yeah, pick your battles, is it worth it? Yeah. You've got to use, a lot of assessing is common sense. Is this person just going to be completely, you may end up going to have to go to a junkyard.
It might be the grandkids come out and use them as a bunkhouse or
Yeah,
something.
Yeah.
Is
Yeah.
is it true that a lot of towns don't do RVs and stuff, and the ones that do are pretty much only doing them in parks, or is it,
Well-
as far as like the individuals? I mean, I know,
most RVs, excuse me, are utilized. I register mine. I mean, I want to use mine, so I can't drive it or take it on the road if it's not excised and registered, so.
right,
I mean, most of them are, but the issue comes up with, if they're in a park and they're left there year-round, they're subject to tax in that municipality. Now, I'm gonna go one step further, which many people don't realize, but if I'm a Maine resident of Monmouth, which I am, and I leave my unregistered and excised travel trailer or RV in the town of Wells year-round, and I register it in Wells, excise it in Monmouth, it's still taxable in Wells, because that's where it was left and located on April 1st. Yep. So that excise tax collector, and this is, I've had a couple excise tax collectors, I've given them decisions and had them instructed to refund the money to the town, so where the the tax, the mobile home is, the travel trailer is located, and just, they were, not happy about it, but they did. And that person proved that they paid the excise tax, so they could apply that to the credit to the property tax, but it behooves if you have a large amount of RVs and travel trailers, is to be there on April 1st and have a personal relationship or good rapport with, not a personal relationship, good rapport with the local owner. That way, I mean, because they could be liable for them. If they don't want to give you a list of the owners, they could be liable for what's sitting in there. Okay, and taxable property year is April 1st through March 31st, 36,502. That may be in your future. This does not mean property taxes are assessed on April 1st. It means that property tax is assessed on the basis of who owned and what and where on any given April 1st, regardless of when the tax was actually assessed. So, I'm pretty sure this is the one confusing example where the keyword may not be in the index. Let's look up tax year.
It is.
Okay, it is?
502.
Tax year.
All right.
I think it's been added, it didn't used to be.
No, it was taxitis.
Right.
Yeah.
Tax year.
This is why I've been emphasizing this. Hey, they listen to me. Excellent. Yeah. That makes me happy. Tax year. Okay. Okay, conversely, back in '87, I'm gonna give you an example. The Worcester County flood, wasn't that April 2nd, 1987? Anyone from Worcester County?
Yeah, but I wasn't there then.
Okay.
I was 3 years old then.
Oh, that just hurts.
I forget how old I am.
That does.
I'm in denial anyway, but I like to remind myself once in a while that, I'm definitely a charter member of the Great Legion. They had a great flood that affected large portions of Fort Fairfield and along the river, and wiped out a huge amount of valuation in the downtown. And the assessors asked us for our opinion of whether it's taxable. And I says, well, we said, yes, it's taxable. But we're not gonna, then I furthered that with, I'm absolutely not gonna check for every one of those buildings if, the selectmen decide to, in there is uncollectible, but that's after a couple of years that they can do that, but that was local prerogative or discretion as far as I'm
It was
concerned.
April 2nd,
What?
the flood happened April 2nd.
Mm-hmm. Yeah.
And flood insurance is not liable for the property tax or anything like that that's owed on.
Yeah. So I think the assessors looked the other way, and the agent at the time for the state did not bother to, say that this is wrong, and neither did the citizens. The citizens of Fort Fairfield didn't go up in arms to say, you cannot do that.
Did you post that on listserv a few weeks back?
No.
Somebody did.
Did they? Yeah. No. It's a little latitude that local government, I would not, be upset, but on the other hand, you know, you could stretch this to the point where a house burns in the middle of the year, and they want to give them an abatement because their house just burnt out. Typically, homeowners have insurance, at least in today's world. Maybe years ago they didn't, I mean, but in today's world, if it's encumbered by any mortgage or anything else, they absolutely have insurance. Or they don't have a mortgage, but, so they are covered under that, and the assessors, even though they feel, you know, oh my God, they were burnt out and all this, there's plenty of assistance and,
But it goes the other way too. I mean, a lot of people build a home to start sending people, you know?
yeah.
And then it's done in June, and they're not getting taxed on it all year from July 1st to the next June.
The modular lands on May 1st,
Yeah,
so it skips a whole year practically.
yeah.
Yeah, oh yeah.
They could arrive on April 2nd, it skips the whole year.
I
But
had
what
that
they
asked.
owned as of April 1st, there has to be some date.
Yeah.
There has to be a date of the status of the property, and the date is April 1st.
I asked.
Stead and fast, that's ownership also. That's not when it's recorded. If they purchased the property on April 1st, and the recording agent didn't get around for a week or so to record it, and it wasn't recorded until April 10th, they're still, the new people signed for that on April 1st. It's like mobile homes in a mobile home park. They're pretty tough. You don't get deeds, recorded deeds on it, so the ownership is that they have a bill of sale and they transferred ownership. If not, if you don't know, the person in the previous assessment is valid if you assess the previous person. And the lien will go on the property, so it behooves people to tell the taxes. There's all kinds of safeguards, but for the collection of taxes. Okay, so we went into that, and the deed cannot be backdated prior to April 1st by a seller to transfer the liability of a tax. A deed does not transfer the title until it is delivered to the buyer. That's why there's closing agents and attorneys now in today's world. Inventory of taxable property, physical inspection tax list, as soon as or after April 1st is practical. The assessor should begin the first step of the assessment process, which is to update the existing records in the nature of land, buildings, and personal property, amount, size, number, and the value of the taxable property, 36,708. There are two approaches to building an accurate list of property, as its just value, and the assessors should employ both methods in combination for optimum results. Primary approach involves physical inspection. It's always good to physically inspect properties. Some go by the building permit, but I never suggest that, because especially with garages, they seem to grow overnight. You may pull a permit for a certain size house, and by the time before they get a construction loan or whatever, they've decided to revamp it or increase the size, maybe decrease the size. Primary approach, visual inspection, the accuracy of the list of property and its just value generally corresponds with the thoroughness of the inspection. Assessors are required to physically inspect each taxable account at least every 4 years. Title 36, 328(7). Failure to do so will not invalidate the tax, but it will most likely result in inequitable valuations and numerous appeals. So, physical inspection for some selectmen in towns can be as easy as where do you drive during the course of the year? Now, if you drive by and you don't see any changes, I mean, that's physically inspected. I don't expect part-time elected officials to get out and inspect every property. It'd be ideal if they could. That's where assessing agents come in, and they will do that work for you. But if you're holding full-time job and you're a municipal official, and sometimes it's very difficult to find the time, depending on your size of your municipality, to get out there and thoroughly inspect, physically inspect property.
We call them windshield inspections.
Yes. Yeah. And even some of the professionals are caught with the rear view mirror in their picture.
What does it need? What do you need to do? If it's down deep a driveway, then you probably have to go up to the door.
Yeah,
I can do downtown Union and walk around in 2 hours and I've
yeah,
got 150 houses done.
yeah.
Looks about right, looks about right, looks about right. Check the books, good.
Yeah.
It's a speed limit thing. You have to go half the speed limit, that's an inspection. Put that down.
Yeah.
5 years from now, I'll hear about some emails like, they said the inspection was half the speed
Let's
limit.
put it
Jim
all over the
instructed
listserv.
us.
That's right. Be on the listserv. Murphy said, oh, jeez. What do you need? You know?
The requirement of a physical inspection does not supersede the property owner's right to privacy. You do not have authority to get inside their property or to be on their property if they don't want you to trespass. It behooves most taxpayers to let an assessor in if they want to go, but you've also got to respect their privacy. I mean, you step in most houses today, you basically know what's in the rest of the house. I mean, you don't need to go from, ideally, we used to train people to go from the basement right to every bedroom. That's very uncomfortable. Uncomfortable for me, let alone the taxpayer. You know, so I'd really rather not step over dirty laundry and everything else in some cases, but, you know, basically you know what condition the rest of the house is in. And if you don't, ask if the upstairs is unfinished, if it's new construction, capes. A lot of them, young couples, they buy them with a bedroom downstairs and the upstairs remains unfinished until they, you know, a year or have children and so forth, so, yeah. There's you cannot force people to, but the people that tell me that, I don't want you here, I don't want you trespassing, I says, well, I'm gonna have to do my due diligence for this. And I said, for the fairness of the other taxpayers, I'm probably not gonna be on the conservative side. Yeah. So, all you can do is, talk to them. So, we had one assessor that was gonna invoke he thought he had the power to enforce entry into every house.
You got nothing.
What?
You got nothing.
Yeah,
If they don't want to let you in, take a reasonable value based on similar properties, and here's your value.
yeah,
Don't
It's gonna be hard for them to appeal it.
Don't
yeah,
overcook it. If they
Yeah.
complain the house is in poor condition inside, then you get to go to the house under 7.
Yeah, you
or
can
6A.
ask them.
And this is where your logbook helps, because you have a record of that you have made it, and they can, if they try and do an
We
abatement.
mark it right on that card.
Yeah.
I get tax maps every year, and I just use a highlighter on every street, and I've gone through all the streets, and I've been by there, and nothing, doesn't have to be too fancy. If I see something, I'm the assessor, not home, here's my note, I'd like to make an appointment. Treat people square. You don't hear from them, send them a letter with a new value, and then I say, I left you a note, I'd like to talk to you. And looks like you've remodeled the house. I'd like to get together with you. If I don't hear from them, I send a text book.
But you would have a record of any visit histories on your card.
Right.
If you went.
The last time I was there.
Yeah.
For the drive-by stuff, it's just on the map that I've been there. But if I've been up to the door, there's a date and there's a reason.
30 or 40 years ago, contracts were written for revaluations or reevaluations of tax equalization programs, which I'd rather refer to it now, with an entry level. You had to make 90% at least entry level, or make an attempt twice or 3 times to do that. I wouldn't suggest any assessor or assessing firm to signing a contract that has that. With people in today's society, there's multiple incomes and multiple jobs. there's rarely anyone home, and you just, some
Security
people,
cameras
yeah. Yeah, security cameras,
everywhere.
yeah. Yeah. It's, you know, if the place is not posted, there's no trespassing, and you need to review the property, you can go measure it, as long as there's no dogs kicking around that you'd be scared of. And, you know, it's permissible trespassing because you're doing an official duty. And we can look in the windows. I've had people stare back at me though. Oh. Well, you didn't answer the door. I didn't do it for a reason.
Google Earth has a measuring tool on it
Yeah.
as well. It's pretty close.
Yeah,
You can get, I can get within 2 feet accurate.
yeah. Oh yeah, it's
Yeah.
handy, but you gotta make sure if you're just punching in addresses, you gotta make sure it's that house. Sometimes Google Earth is a little off. Yeah,
No drones.
no drones.
No drones.
Violate, yeah.
I'm not gonna use one. If I need to see a property that close, I'll send a letter. Yeah, treat people decent.
Yeah.
I don't wanna be a shot down assessor, so.
No. Plus, you have to get clearance to use those foolish things.
It's more trouble, send the letters, 50
Yeah.
cents.
They're the taxpayers of the community, you know. No need to battle with them. Yeah. You're just doing a job of valuing you. You're not tending the town meeting. Well, if you're local assessment selected, you are, but, you know, the town meeting's giving you direction on what money to raise, so tax is not your responsibility. Responsibility is equitable assessments. Or just value achieved, as reasonably as possible. Another but not mutually exclusive method of developing an accurate list in its just value involves the use of taxpayers' list. See property tax bulletin number 2, 36706, referred to as the 706 declaration in a lot of cases. The lists have been known in some areas as doomsday list or doomsday list, doomsday, a term which refers to the doomsday book kept by William the Conqueror, describing lands and estates of persons in England after his conquest. Before, I mean, some towns used to publish on April 1st at the town hall, and some of them actually send it out in the town annual report, which I've told a couple of towns it's not legal, barring their right for appeal if they did not march into the assessor's office on April 1st and declare their property. They were barred from their right of appeal, which is not true, but there was only one town last year that I caught that still had that, and they never was an issue. Okay, before making an assessment, assessors may give seasonable notice to all persons liable to taxation with that jurisdiction, excuse me, to furnish, here we go, to furnish and the assessors a true and perfect list of all taxable property. The 1st of April. Seasonable, which is neither defined by statute or judicial holding, is taken to mean on or about April 1st to declare their taxable property. Some towns use mailings to send, some towns have success with those, most don't. They end up in the trash can, or they end up coming back same as last year. Keep your nose out of my business. Yeah, but
Here's your tax bill.
what?
Here's your tax bill.
Yeah, exactly. Yeah. To the best of my ability, I mean, that's all you can do, Chris. The notice should state the filing deadline for filing the list. The time frame should be reasonable enough to allow a taxpayer to comply, and the deadline must come before the assessment is made. That means commitment date. The word reasonable is necessarily ambiguous. The facts of each particular case will determine what it is and what not is reasonable. If the assessors neglect to give notice to file a list, their assessment is still valid. If an assessor requests more than just a list of property with seasonal notice, for the example, the value of the property and the asset life, like in personal property, and the property owner does not respond, the assessor cannot later deny the owner participation in the abatement process. So
But if
two-
they don't furnish anything, including a list,
Yeah, you can deny them, yeah, on the grounds of that, but it's a two-step process. There's court cases on that, or state board cases anyway. There is no statutory prescribed form for the taxpayers list. Samples are provided in bulletin, tax bulletin 2. Standard types are available through various printing houses. Mark's Printing House used to do some of them. My advice would be to contact professional assessors or assessor in a larger jurisdiction, or get on listserv if you have access to the listserv, MMA listserv, assessors chat room, so to speak, and request them, and most assessors will send you copies of theirs. Some of them will even send you them in Word, so you can just delete or edit and put what you want in it for questions and inquiries. In the fulfillment of the requirement of true and perfect list, the taxpayer need not specify the value of the property that is being declared. In the cases where the taxpayer is uncertain of the ownership in the property, for example, if the title is in dispute in litigation, those facts may be stated in the list. If the property is exempt, it is not necessary to include it in the list. Your true and perfect, your commitment book, in other words. The taxpayer who furnishes a list timely by whatever means suggested in the assessor's request letter satisfies the requirements of this section.
if it's exempt, it's not required to be listed, how would you then report your betting? Or you're talking about a different
Now, this
kind
is
of
totally
exception?
exempt property.
Okay,
Yeah.
possibly.
Yeah.
Okay.
It has to be listed every 5 years in the commitment book, but it doesn't necessarily have to be in your property. It's like a lot of towns utilizing Trio forget to hit the toggle switch, not to print exempt tax bills. And especially since when Betty came along, I had to go in and recommit many towns in Trio, which is just a simple step, and hit the toggle switch, so it didn't send tax bills to people that were fully Betty exempt, didn't have any other personal property value. That way the town's not sifting, if you use a contractor to mail out your tax bills, which many municipalities do, you don't want to be mailing a tax bill to the town of South Portland, the city of South Portland, so to say, for all their exempt property. If you listed all the exempt property in the book and didn't hit that toggle switch, you'd be sending yourself tax bills, or you'd be printing them anyway.
Yeah.
And in many places, if you use a contractor to mail those out, they'll be mailed to you.
Yeah.
So, to avoid that, there's no, okay, if a taxpayer fails to furnish, to file a list and the notice was given by mail, the taxpayer forfeits the right to appeal by assessment. Unless the list is filed with the abatement application, the assessors are satisfied that the taxpayer was unable to file the list at the time appointed. On-site investigation of the property by an appraiser hired by the assessor does not relieve the taxpayer of the obligation to file a list. However, the right to appeal the assessment is not forfeited if the taxpayer claims the notice was never received and the assessors have no proof, such as certified mail return receipt, that the notice was sent. Okay? If you're doing a general mailing, that usually satisfies notice, but a taxpayer can claim he didn't receive it. It's unlikely, but taxpayer, if you've got taxpayers that you know are gonna be contentious, or there's gonna be an issue, send them certified mail, especially the
Look up the
person.
website and email it to them as an attachment with read receipt requested.
Yeah, well, you can prove delivery, I mean, yeah, yeah, you've done that,
Yeah.
yeah. That's proper notice,
Along with a deadline extension and.
yeah,
Betty has changed that. You can grant a Betty now right up to date of commitment practically.
Yeah.
It used to be May 1st, and you had to have an extension.
In writing, requested in writing.
Yeah, my practice has been, if it's 8 minutes before the commitment and I can get it in, I'm gonna put it in
If I
and
can.
do what I need to do and fix it. That's one less thing I'll have to deal with after the bills
Yeah.
go out. So I fix literally everything I can.
if you can avoid future aggravation, unless you're really into self-punishment, do it at all cost.
We'll be
Yeah.
there for the benefit of the taxpayer, so if
Yeah.
they're entitled to it, then
Mhm.
you make it happen, you want to.
It's like a homestead exemption that gets lost on my desk for 3 months, just saying maybe. No, we'll put it in.
So most towns, it's not fiscally feasible to mail out certified mail to every taxpayer, and there's no need. The only time that it's usually suggested that you do is if personal property becomes an issue. To secure your personal property, especially if you know that it's been an issue in the past. You don't have to send it to every taxpayer if you know you have taxpayers that are compliant.
But I could do certified mail to everybody who hasn't responded to that little survey we send out.
Yeah, you
Personal
could,
property.
but it'd be quite expensive, wouldn't it?
No, it'd only be about 50 people in town. A lot of
Really?
out-of-staters, every out-of-stater who lives in town responds to that. Every single one sends it back to town office. It's
Yeah.
just, there's, about half the people in town don't.
Okay. They don't need to know my business. Well, it's basically the way the world is, or the country today is, polarized. Commitment of taxes is the assessor's act of delivering the tax list to the collector together with the certificate of commitment in the certificate of assessment in the collector's warrant in the certificate of commitments names of the collector and the amount to be collected. In the date of the commitment, it must also be signed by the majority of the assessors, 36,709. The certificate of assessment certifies that the commitment book by indicating the number of pages in the book, the year of the tax, the date of the commitment, and the signatures of the assessors. The collector's warrant is the legal instrument that authorizes and compels the tax collector to perform the duties of tax collection. No tax collector should start collecting any tax or without a previous commitment unless you have prepayment arrangements and you buy in the town's charter.
Or authorize a town meeting to collect taxes not yet assessed.
Pardon me?
Or authorize a town meeting to collect taxes not yet assessed.
Yes. Yeah. But the tax collector is responsible to follow, to act as on their charge to do those duties once they receive the commitment certification.
Good question.
The certification of assessment must also be returned to the appropriate treasurer for the tax included. Yes.
So, the tax collector should not be collecting any prepayment unless there's been
Town meeting.
something come up at that most recent town meeting or any town
Yeah.
meeting.
Most recent, usually.
No, that's great, okay.
So we can
So
just,
prepay, like if a taxpayer is an out-of-stater and they're headed back to Florida and they know their tax bill's going to be out in the next 2 months and they just wanna get a chunk down, they shouldn't really be coming in and saying, hey, here's $3,000 towards my next tax bill.
We'll take it.
It was the change in deductions that you're allowed to do for your personal
I know,
property
right?
tax.
Most
which caused
towns,
people to move.
most towns will accept prepayments, as long as they're recorded correctly, and, I mean, and they have town vote authorization to do so.
That,
Yeah.
That's the
And
step that I
usually-
think a lot of us are missing.
Some of that,
Yeah,
yeah,
it'll come up in next time meeting.
Yep. It definitely will.
it'll come up what?
Next time meeting.
Yeah, at my next town meeting, we've got to put that in, because it's definitely happening now in town without that authority being given.
Oh, okay.
Yeah, yeah, we take it all the
It's,
time.
it's not a big deal.
Okay.
It's, you know,
It's
they just
probably
vote yay or nay. They vote yay.
Tax collector's still responsible for that money, and so isn't the treasurer. In small towns, they're one and the same. They hold both duties, so they are personally liable for that, and MMA, the risk pool, they're bonded for that. Yeah, so, I mean, they take their jobs pretty seriously.
It's okay,
and
it just
the-
needs to be-
The ones that violate that usually end up doing some time. Okay, so we'll get going with the commitment of taxes. We're only up to page 29 here.
well, in our book it's 45, but.
What?
still, in our book it's like 40.
Oh, is it? That's great.
41.
That's page
But
41 of
still, there's still a long
125.
ways to go.
Yeah.
45 or 125.
Commitment of taxes, and it's on the forms prescribed by the state tax assessor, and if you have any questions on those forms, they're right on the website. This is the assessor's certificate that prescribed or something similar that will describe all this information. It's similar to the tax rate calculator, but it gives a little more specific information. And tax forms, taxes prescribed by the state tax assessor in 753. Power to enforce them is in 205. Okay, assessment records. Before taxes are committed, assessor is required to make permanent record to be kept in the assessor's office. If there is no official office, there's a place where the assessors regularly meet, whether it's the kitchen table or the Lions Club or wherever, and meet to conduct business. Permanent record is the valuation book, or some commitment book, whichever one you want to refer to it as. And show land, buildings, and personal property. And exempt, Betty exemption and veterans exemptions and so forth should also be listed in that. Every 5 years, exempt property must also be listed in the assessor's inventory, but not in the tax list, together with the assessor's estimate full market value of the property, 36,707. Exempt valuation is required to be reported on the annual municipal valuation return, which is Title 36, Section 383. Training and certification. The goal is to have guidance for competent professional administration of property taxation. The cornerstone of professionalism is the assessment administration, is the sound knowledge and experience in various requirements of the vocation. Since 1980, they are required to be, professional assessors are required by Maine Revenue Service 327.3 as professional assessors as defined as any person employed full-time by one or more municipalities who devote at least 75% of the work time to the assessment administration. We don't go into testing of violation of anything. Property Tax Division holds qualified exams at least 4 times each year. That's in 36.310. And those exams are usually, times and places are usually posted on the website under training and certification. We're moving right along now. Look,
Do you know what your exams are? The exams.
what,
Is there a charge for those exams?
is there what?
Is there a charge for the CMAs?
We taking the test?
Yeah.
Yes.
I don't believe so.
No, I think
Okay.
Not this week,
Yeah,
but
it's
It's included in
50
your,
it's included in the
This week,
registration
right,
this
but
week.
like somewhere out of the
Yes,
4 times a
I
year
can
there.
tell you, yes, there is.
Yeah,
It's
$20?
like $25.
Okay, okay, so it's, okay, yeah.
Yeah.
It's not like $400, got it.
No.
That's what I need, okay. I can tell them, no, I won't say that out loud, okay, good.
Camera's running.
Tell me. No, really, boss, it was $400.
A municipality may legally raise or appropriate money for a number of statutory specified purposes, such as operating expenses, public works, schools, libraries, health and welfare, development, celebrations, conventions, general duties and operations, which is usually under municipal appropriations, if the town does, if the legal legislative body of the town votes to do so. A municipality may also appropriate federal and state grant money received for purposes to improve by grants, 38, 5721 through 5730. There are no questions on that. An example of an illegal purpose occurs when a municipality uses tax money to pay the property taxes of disabled homeowners. This purpose constitutes an exemption from property taxation and infringes on the constitutional power of taxation that is invested exclusively in the legislature under Article 9, Section 9. They will not surrender the power. Taxation, so. As a rule, the assessments of property tax is legal only if the residents vote in favor of the amount to be raised at a meeting legally called and notified 36503. It is not the assessor's responsibility to determine whether or not the municipal appropriations are lawful. An assessment is still valid regardless, or notwithstanding, as they have here, that the money raised for an illegal purpose is assessed together with money raised, legally raised money. Any person that pays the tax is partially used for illegal purposes may recover from the municipality that portion of the tax that was not legally raised, 25% interest and cost and damages sustained by reason of legal assessment, 36504. Which involves going to Superior Court, so, to recover that. That's why I mentioned before, most taxpayers don't go to that extent. If the municipality is transparent and informs the taxpayers, we made a mistake, but we will put that money into unexpended fund balance or surplus, and we'll use it to lower next year's taxes. Yeah.
So I think I understand that, like, so if it's anything outside of what the state really allows an exemption.
What the town meeting allows them to collect. Sometimes I gave the state allows for the town meeting to direct the town on how much they vote. Legislative body of the town meeting usually, or the council usually votes. Sometimes the school budget goes through 7 votes or less. It's usually 4 or 5 till people come to meeting of the minds or just distastefully vote yes. But if they raised more than what the school warrant was and they discovered it after the commitment, as long as they stated that money is going to go to reduce the commitment the following year and the taxpayers, the tax is still valid. They just made a calculation error. So instead of having to totally recommit for an invalid commitment, the statute is saying that it's a legal valid tax assessment and you have recourse if you feel aggrieved and you want to go to Superior Court.
Unless it's more than 2% of the total amount. If it
Yes.
goes over that, then it's what?
Yeah, it's invalid, yeah.
But going back to the point of the one above, so you, so like illegal purposes would be, you know, doing any exemptions that are not state exemptions. So like, in the example that's given, giving exemptions for property taxes for disabled homeowners, like that would be illegal because it's not an exemption
No,
done
this
by the
is,
state. Right? Like that's not an.
no, an illegal exemption, a legal assessment is different from, an error in assessment is different from an error in valuation, and even we can't get it right in some of the questions asked. I have to keep correcting it, and I'll give you an example later on. But most assessments are errors in valuation, where your valuation is, and that's only abatable for 1 year. An error in assessment is if I assessed you for my property. That would be an error in assessment, and the municipal offices can appeal that, abate that for a 3-year period. So there's a big difference, distinction, and most towns don't understand it or don't draw the line. There's a big difference between an error in valuation and an error in assessment. Because I could have taxed the wrong owner. So I think that answers the question. I'm not sure.
No, but we can move on.
Okay,
It's okay.
well, where were you going with this? 'Cause
It's okay.
okay. There's all kinds of reasons for abatements, but an error in valuation, we'll get into that, and that question is likely in your future. Tax rate and overlay. A property tax rate is computed by dividing the amount to be raised by the total taxable valuation. The property tax rate of 2350 or .0235, for example, is typically expressed in the terms the amount of revenue the rate will generate for every $1,000 of taxable value. That, in this case, is $23.50 per thousand. Consequently, the tax rate is also commonly referred to as the mill rate. Mill is defined as 1/10 of a cent or 1/1000th of a dollar. The computation of the tax rate is generally assumed to be the assessor's responsibility. However, the law is actually silent on the question of who determines the tax rate. It is a good idea for the assessors to collaborate with the town manager and the finance director when determining the tax rate, or if you're a board of assessors, with the selectmen. Because it can be a huge bone of contention if you just say, this is my authority, I'm the assessor. Generally, it is the assessor's responsibility. But you want to have good information. You're not liable for any of the information given wrong, but you want to make sure, as Jim said, that you check with the town manager or the treasurer or the tax collector, that they, or the town clerk, that this is the warrant numbers and they don't include numbers twice, which many of them do, whether they're net budgeting or gross budgeting. When they're net budgeting, it gets to be real confusing. Yep. An extreme example of net budgeting is the town of Kennebunk. Very large town that has every municipal service you'd want in life for that type of community. And their budget shows that they run everything cheaper than any other town in the state of Maine that are similar size or similarly situated, and they net budget. They don't have hardly anything in revenue sharing, and they don't have anything in other deductions. They take it all out above, so it looks like it gives a false perception to the taxpayers of what actually it costs to run the municipality. As a matter of fact, I call it disingenuous to a great extent, because the municipality, your taxpayers are voting on something it only costs this much to have all these services? Boy, the town of Wells is really ripping the people off. And it's not the case, it's just how they portray it to the taxpayer. I don't know why, it's an archaic practice, but they still continue to do it. They even put it on listserv, proudly. Just shook my head. Okay, under certain circumstances, fractional differences may occur in the computation of individual tax bills. For example, tax rate 2350, excuse me, times the valuation of $125,250 produces a tax of $2,943.37.5, which would be rounded up to yield a fractional difference of 1/2 cent. Either adjusting the tax rate or rounding the valuations may easily avoid fractional differences. A lot of towns have gone to rounding all assessments to the nearest hundredth, some to the nearest thousand, but most common practice is to the nearest $100. And computers make it much easier.
Can't imagine doing that by hand,
Yeah.
those giant books and totaling it. Can't imagine.
Yeah.
We have big calculators.
At times, the town clerks and other people, the selectmen used to do the books, write in the meets and bounds and all that. We're not talking large communities, but in some large communities, they do it in pencil first, verify that, and so they know it has to be in ink. Then they do all the calculations, add up the pages, take the tape on the calculator, make sure that it all matched,
I was
and
just
then
gonna
they
say-
rewrite it in pen.
We have rolls of tape on every calculator in the office so we can check our work.
Yeah. Yeah.
I had a Trio customer that had the big book. She came out when we converted her. She said, it takes me 4 weeks every year to foot and tie every single page. And she calls me every year just to sit with her to hit the button because she doesn't believe Trio can do it that easily.
Like 3 seconds.
Yeah, so I sit and fold tax bills with her every year. She doesn't want to hit the button herself. She does all the work, but I just let her hit the button.
Wow.
Amazing.
What
The book was
service?
almost as big as she was.
Wow. Yeah. That's a lot of town clerks have been that way for years, and they're not going to change. They resist change as much as possible. But God bless their soul for they were diligent. Sometimes you shake your head and you go, yeah, you're conscientious and diligent to a fault. See, although the accuracy of automated billing programs has virtually erased the traditional disadvantages posed by fractional differences, the avoidance of fractional differences tends to result in a cleaner product. Okay, even, I'm gonna go back to something that I may misunderstood, I'm sorry. The 2% related to, Lena, the county tax, it didn't
Oh,
respond.
county.
Yeah, the county tax alone, so it wasn't subject to it. The tax is still valid even if it exceeds 2%.
Is it possible in the next version of the book to put the citation for that line? Because I was running around searching for it in here,
Which one?
the county tax line, because everything else is cited.
Okay,
Not that it needs to be done now, just for future editions
I'm
of the
gonna-
book.
38,706?
It's 36, 36,751,
751, okay.
I believe.
There was something, 38,706 is when they have to get the commitment out by a certain time, the county commitment, I believe. But I rolled, scrolled back up, now I lost my place, here we go. Even if it were possible, it would not be practical to set a tax rate which would exactly produce the amount to be raised through property taxation, since property tax would fail to serve its purpose if it was to produce less than the amount needed to be raised. You'd have a shortfall. Tax rate is selected which is expected to generate the amount in excess of the amount needed to be raised. This surplus, called the overlay, must not exceed the amount to be raised by more than 5%, 36,710. If it does, the entire assessment is void. That is true. Unless you use some magic with the revenue sharing or other deductions, you have latitude and other deductions. Believe it or not, in some towns, the selectmen have the latitude via the town meeting to, at their discretion, how much surplus they're gonna put in there to reduce the mill rate. And I always ask when towns exceed something, is there any latitude in your warrant? Send me a copy of your warrant certified by the clerk, I wanna read it, line by line. There may be a way, if they exceed that 5% due to some calculation error that was inadvertent, or certainly not intentional on their part, because they don't want to bring frustration to their life. There's always a way to at least examine if they can avoid recommitting. Okay, so the assessment must not exceed the amount to be raised by 5%. That is in your future somewhere. The purpose of 710 is to allow for the convenience and practicality in the selection of a tax rate and avoidable small amounts of excess revenue, which is merely incidental by a byproduct of administrative convenience. The overlay, when it was enacted years ago, before calculators, allowed you to a fractional to round your mill rate, so you could have your assessments come out evenly with your hand calculations. I mean, you know, calculators haven't been around all that long, and long enough for some of you, and they've existed your entire life, but you know, calculators are relatively new, not, you know, in comparison to property taxation, so in relation to property taxation. Okay, the legislature never intended the overlay to be used to build a kitty of an unappropriated, I love that, surplus funds in municipalities which do, by engaging in a policy of consistently assessing the maximum allowable overlay, may jeopardize the validity of their property tax by inadvertently exceeding the overlay amount. It's not meant to, it's meant, like I said, back in the days when hand calculations, to round things to the nearest convenient, so you didn't have long calculations or uneven tax bills and all that. But it has been used most of the time to, as a cushion and for abatements, but in actuality, if the town was to appropriate money for abatement fund, would be ideal. That would be the best way, but most towns use the surplus for abatement, so to cover, but they have to have, you know, permission to spend it. Due dates and interest rates. When discussing property tax payment schedules, it's important to differentiate between the terms payable, due, and overdue. The terms due and payable may appear to be used interchangeably, but the distinction does exist. All taxes are payable, but not all payable taxes are necessarily due yet. You get your taxes which are payable, usually 30 days before they're due. In some cases, 30 to 45, 60 to 40, either 45 to 60 days before they're due. Depends on how fast they get the commitment out. Usually, a lot of towns love to establish the date that the taxes are due, and the assessor's under pressure to get the commitment out. Property taxes are due on the specific date established at the annually at the municipality's discretion. Balances which remain outstanding after that date may accrue interest, excuse me. Taxes are overdue after the due date established by the municipality and generally accrue interest from that date. Statutes often refer to overdue taxes as delinquent. At a meeting when the municipality votes on a budget, it is also a vote to determine when the tax list must be committed, when property taxes are due, the rate of interest on overdue taxes, and whether or not a discount referred to in law as an abatement is allowed for taxes paid prior to the specific date. Some towns give discounts for early payment of taxes. If you pay your taxes before the absolute due date, they give discounts, but they just have to appropriate more money so they don't have shortfalls. You got to anticipate that, but some towns still utilize that. Not a lot, but some towns do. Yeah?
10%.
Yeah.
10%, wow, holy crap.
How much?
I want to say it's 10%.
That's huge.
Yeah.
That's nuts.
Well, it used to be 3, but
10%?
I might be wrong. I remember read it. I've paid them for 8 years now, but seems like that much.
Yeah.
But you have to put the discount in the budget.
Yeah.
Yeah,
you do.
That's the issue. And so, in theory, your budget is
What
higher.
if
so
everybody just paid early though, then you're basically just
But it's in the budget. for-
elevating your mill rate.
There you go.
Well, kind of artificially, because you're gonna raise it, and
Artificially,
then you're gonna use
right.
it lower.
Yeah.
But if small towns up there can experience cash flow shortages very, very quickly and easily.
Yeah.
So it's more of a, to encourage
it's an
that.
incentive.
Right, that cash flow to keep going. Because up there you'll get 3 months of taxes and then, you know, that's all the people who are actually
It's almost
anticipating.
more to say you're getting an extra fee if you don't pay on time, so.
There are many small towns that actually run on a calendar year instead of a fiscal year. And April 1st being the assessment date, the town meeting is in March.
Yeah.
Some of them don't commit their taxes until November. Some of them don't commit their taxes until December. They've gone the whole operating year with no cash flow. I says, what has changed in the town? Why can't you get them out? Oh, it's just, you know, things happen. Yeah, compost occurs too. I mean, so, you know, we've had towns that, with financial problems, that have committed for 1 year in the following year, January and February.
Idaho,
Yeah,
Idaho,
Idaho.
who didn't do a commitment at all.
Yeah, they have now, they've caught up now.
They did 2 a month apart.
Yeah,
Kid you not.
Ouch,
Yeah.
ouch.
Wow.
they had, first
Did
hours
people
get,
just not get their
first,
tax bill for a whole year?
They
yeah.
didn't
And
even
then
have a
they
town
double?
meeting or elections or anything for a whole year.
The county administrator kept calling me and go, what can we do, what can we do, what can we do? He was more concerned about his county tax. The residents were calling me going, we need to get a tax bill, we gotta run the town. I says, well, did you have a town meeting? No. Well, then you can't collect anything. You gotta appropriate the money first. And they go, oh, and then they had the town meeting, and then they had a subsequent town meeting to cover all this, and I'm getting calls from the taxpayers. We got 2 tax bills in a month.
One for last year, one for this year.
Yeah,
But don't they have like a town charter that says, you know, that town meetings will be?
we're talking about an island town now.
Hey.
With 60 residents, I know. 60 residents at
Not
the
that
height of the
far off.
season, maybe, I know. Yeah. Yeah, they, I mean, the Millinockets, when they were in financial trouble, East Millinocket didn't get their tax bills out 1 year until in February of the following year.
Almost seems like it's more
Yeah.
important to do it though, if you're in financial.
And I have one small town that's not a cash flow, and I have no reason or understanding why it takes him so long, but he sends out Christmas presents, tax bills. Why would you do that? Well, it's always been that late. I says, in the town of this size, I'm not gonna mention the town because he does a fabulous job, but exceedingly slow.
Well, instead of Christmas, you could just wait a couple extra months and do it near tax return time and
Yeah.
Valentine's Day, right?
Yeah. Yeah.
I love you.
then. Oh my gosh.
Okay, the maximum tax rate for delinquent taxes is determined by the state tax assessor, provided the chief municipal officer in writing by January 20th of each year. And it's usually on the treasurer's website. Now, I don't know if it's been 7% for the past 10 years, I believe.
Interest rate, what did you say, 8% a year now?
It went to 8 this year.
Went to 8?
And that's the maximum order.
That's the
Yeah, the maximum.
It's been 7 for years.
And that's been set, that's set by the state tax treasurer, state treasurer, I believe. When it went up to somebody, one of my towns used 8% this year, and I went, you're crazy, nobody uses 8, but I didn't get that little postcard in the mail that said 8%.
I didn't either, ours is gonna be 7 this year.
Yeah.
Based on a whole percent.
I have one town that voted 4. I don't know. Sometimes it's like that.
They know that they're the ones who are gonna turn this way.
Yeah.
So when you're
Tax ledger.
When you're calculating your interest rate for previous tax bills, I know this isn't exactly assessing, do you use then, would you then they pay, everything's at 8% interest when they pay? Or do you have to do the interest change every year that they haven't paid?
Interest change is every year.
So when they come to pay you and they say like, oh, I'm gonna give you $8,000 to cover me,
Yeah.
you have to charge them the interest of that 1 year, the interest this, or this present year?
6% for 3 years ago, 7% for last year.
Yeah,
8%
we aren't
for
doing
this
that
year.
So you're saying is never change it, keep it at 7, because that math would be an option.
Well, unless the state treasurer says the rate is 6, then you're gonna
Yeah.
put it. Or, it should be a penalty for not paying on time.
Yes.
I'm okay with that. 25%. Or 25%. But that rate is set by the state treasurer.
Yeah.
I'm having a hard time finding where we were at talking with that 7 and 8%. I'm finding something in here that says the maximum is 12%. And I'm wondering if I'm not in the right section.
Page you on.
The third paragraph down under the interest
14.
head.
You gotta remember, yours is different than ours.
This in the
Yeah.
above example would be 12%.
If the maximum allowable interest rate is 12% per year.
Oh, that's
Okay.
So here it is, right here.
That's if, okay.
Yeah, down the very
What's the heading of it?
It's just an example in the book.
Yeah. Does it say somewhere?
At any properly, I'm gonna back up here a little bit, at any properly called meeting, a municipality may
Yeah.
authorize the tax collector or treasurer. This is not your concern. Okay, taxpayer, unless you're gonna be a tax collector or treasurer, to accept prepayments of taxes for which have not even been committed, and pay interest at the rate not exceeding 8%. If the actual tax turns out to be less than the prepaid amount, the excess must be repaid and the municipality must pay interest on the excess amount back to the date of the overpayment, 36,506. This provision is rarely, if ever, invoked. Regardless, any taxpayer who pays an amount in the excess of what is finally assessed, as in the case of a taxpayer who pays under protest, appeals the assessment and is granted an abatement, must be repaid the amount of overpayment plus interest back to the date of the overpayment at the rate established by the municipality, not to exceed 8%. That rate may not exceed the interest rate established by the municipality for the overdue taxes reduced by 4 percentage points. However, the rate may not be less than 8% nor greater than 12%. If that municipality fails to set a rate, it must pay the interest rate that has been established for delinquent taxes by the treasurer or the state economist, which passes it on to the treasurer, that passes it on to the state tax assessor. 36506A.
Question.
Oh my God.
By doing this, you
This
get
is
a.
not on the test. The
But-
question's gone down?
But if you do a 4% interest rate, then prepaying your taxes is better than any savings account or bond or anything you can possibly get today.
Yeah.
Like, that seems financially illogical to me. I'm
Yeah.
sorry.
We're a
Yeah.
bank.
Right, it turns us into
Yeah.
a bank that's charging a very poor interest rate.
Yes.
But however, in your town warrant, it usually says, and to not pay interest thereon.
Yes.
In the town
Towns
warrant.
do not have to pay interest. They'll allow the acceptance of prepayment, but they can also state, we are not going to pay interest on that.
Okay.
So is it the case that if you don't put that in there saying we're not paying interest, then you are bound to this 4%?
Yeah.
Okay, because I don't know why, but our town says, yeah, we'll pay you back 1%. We don't actually do it in practice, but we write that down every year. And it terrifies me that someone's gonna say, you owe me back my 1%
Yeah.
on top of, yeah.
I'm gonna prepay $100,000 and I want my 4%.
Yeah.
Where's my $4,000 a year?
Yeah.
You know?
Well, they don't have to
I wouldn't
accept
accept it.
payment.
I mean, within reason, I mean, the taxpayer, if last year's taxes were $1,000 and someone comes in with $100,000, I'm gonna prepay my taxes, the town would be insane to, I mean, absolutely irresponsible to accept that much money. Yeah.
I have a question. So say you've got the case of a taxpayer who pays under protest and
You
he's
guys are
appealing it.
devious.
No, we've just worked for very devious others, or been under previous devious selectmen. We know
Oh,
how to
okay.
sell.
So say you have a taxpayer that pays under protest and is appealing.
Yeah.
And say you've got 2 billing periods in a year. Say there's,
Mhm.
just to make even numbers, it's $2,000 is what you owe in taxes for the year. And on the first billing period, they paid their $1,000, but they're granted an abatement, and truly they only owed, $1,000 for the whole year, $500 each.
Yeah.
Have they overpaid? I think no, because they haven't paid more than what the total
Yeah.
assessment for the year was, correct?
That's correct.
That's my problem.
Don't be confused by, this is all prepayment statute, so towns usually don't accept prepayment of taxes that exceed the previous year's taxes. And unless they go through a reval, and then they're questionable whether they want to accept things to the point of people going away, they go through a revaluation, and there's severe tax shifts. I'd be very, when they have the hearings and stuff, they send out an estimated tax rate, and if someone was to pay an estimate, I would base it on the company or the revaluation numbers and the estimated tax rate, and I wouldn't accept any more to avoid situations of repayments. Yeah. But the tax collectors are pretty savvy, most of them. I mean, sometimes, but you have turnover.
Depends.
Depends, yeah. Okay, tax bills, there is no requirement to mail out tax bills. Absolutely none. Although, if you do, there's a requirement for things to be on.
Really?
Yeah, if you send out a tax, if you're required by law that it's correct, but if you don't have to send out the tax bill.
Yeah.
But if you do send it out, it has to be legitimate.
Well,
It has to be
have certain things
legitimate.
on it,
Yeah,
too.
and certain
And
things.
it has to have 4 items on there, and we'll get into that, and that will be in your future. Yeah. 4 statements of the legislature patting themselves on the back that, your taxes have been, well, the state of Maine patting itself, whichever way you want to look at it.
Well, the homestead exemption that we've taken your 5% revenue sharing and made it 2%,
Yeah,
what we do.
Our constitutional form of government places the emphasis on balance between rights and responsibility. Property ownership is a basic right. The right is balanced against certain responsibilities, not the least of which is to know what the taxes are and when they are due. This is back when communities were very small and everyone knew each other. You went to local schools and you grew up and your teacher lived in your community or whatever. In fact, there is no law in Maine that requires municipalities to send out tax bills. I know. I mean, it's not practical not to send out tax bills in today's world. I mean, it hasn't been for years. No.
So legally, you could commit your taxes, not send a bill out. Some people would come in and check and they'd pay their taxes anyway. Many wouldn't because there was no physical reminder. And then, come June, you're sending them lien notices, so at least it'd be that aspect, but.
Yep.
Years
You
ago,
own
You
a
could
house,
really
it's your
legal-
responsibility to know you have a tax.
You could really easily foreclose on so many properties.
Well, in theory.
in
A
theory.
lot of people,
If we're late
Yeah.
on mailing the tax bills, we
Yeah.
get dozens of calls.
You wouldn't last-
I haven't gotten my tax bill, I haven't gotten my tax bill.
Mhm.
I think people would just
I think a lot
look at the
would.
website and
But I
it'd
think
be
some would.
fine.
Mortgage companies start calling the town office in April asking about the tax bills.
Yeah,
Right.
yeah. Today's world, you're not gonna get away with that things. Before the 70s, selectmen were, your local selectmen were usually your major landowners in a lot of rural towns. You know how they got amassed that land if they didn't inherit it or it was family in the family for years? A lot of them on foreclosures. Yeah, they would sell it to themselves after the town took possession of it. But that was illegal and has long gone by the wayside, but it did happen for a number of years. But these laws are based on when people used to ride their sleighs in March over the snow to get to a town meeting, and people would actually march into town offices in that town meeting on April 1st, because they had a doomsday notice at the town meeting that they were appropriating money, and they had to meet with the assessor on April 1st and declare their number of cattle or whatever they had, neat cattle at the time, or so forth. That was property that was taxable back years ago. So, I mean, life was a lot different than it is now. So, but that always amazes people when there's no statute that covers tax bills other than what has to be on them if you send them.
Can you choose to only selectively send out tax bills?
To certain people.
Right, well, the example we were using before is I have a number of people in my town who don't have to pay taxes because of the combination of homestead and veterans exemptions. So the tax bill that we send out is negative $185.
Yeah, like I said, why are you bothering to do that?
Right.
If they have a $15,000 property and you're at 100%, it's a $20,000 exemption. No, it's a $15,000 exemption, because that wipes their tax liability off the books.
Right, so I
For
guess
that
I'm gonna
year.
say, so we can selectively send out a tax bill, and we're not
Yeah.
required to.
Why
send
would
out-
you send tax bills to fully exempt property?
Right, just making sure,
Yeah.
where my legal ground is.
Yes, definitely you can do that.
I would
I
still
don't know
send
if
a
it's
tax bill
selective.
to residential, even if there's zero.
Yeah,
Okay.
To exempt property like a church, that wouldn't make any sense. But to a property owner, you send them a tax bill, you acknowledge that, you know about them, that they're getting homestead, that they're getting veterans.
Mhm.
Even though it's a zero balance, they still know about it.
They
Okay.
can see their land and building value.
okay, notwithstanding the absence of any legal requirements to send tax bill, there is a statutory provision relating to the form and content of municipal property tax bills. This is in your future. Be clearly stated that a statement be included which indicates how the tax has been reduced as a result of state municipal revenue sharing, state reimbursement for Maine resident homestead property exemption, and state aid for education. 36507. the property tax division annually provides information to satisfy the later requirement. So, I mean, on the website, there's an April 1st package, and there's taxpayer information. You don't need to. Government. What did I do that for? Assessor's warrant is on there, certificate of assessment to return municipal treasure, information needed for property tax bills. There's a couple of examples on which way you want to portray it. On there, the examples are on there to guide you through and what information that it takes and the calculation steps it takes to put on the tax bills. Okay. Some taxpayers are under the misconception that property tax bill is a legal document for which a municipality may be held liable with regards to errors or misprints, and that a defective tax bill invalidates the tax. There is nothing in the law to substantiate such a claim. The tax bill is nothing more than an informational service which in no way diminishes the taxpayer's responsibility to satisfy any property tax obligations. So if you add a D to Rogers, I'm still obligated to pay my fair share. Fiscal year changes is the period between one annual time of settlement or balancing of accounts and another. In other words, the period between the time of the opening and closing of the books for the annual budget. Most municipalities operate on a fiscal year that begins July 1st and ends June 30th, which coincides with the state's fiscal year. Yeah, most of them are gravitating in that, but there are still an awful lot of small municipalities that operate on a calendar year. They raise money to run from January to December, even though they send out tax bills in December. I can never figure that out. The law provides that in the course of changing fiscal year, a municipality may make either one or two assessments based upon a single valuation, provided taxes are raised based on appropriations made for that fiscal year, or does not exceed 18 months. 30A, MRS 5651. If the fiscal year in question is 18 months, most municipalities send out a 6-month tax bill convening the 13th to the 18th month. This is also used as a convenient starting point to institute semi-annual billing, which promotes a more stable revenue flow. The major drawback to this approach involves the administrative difficulty resulting from the number of ownership changes that occur in the interim.
I've done 5 of them. It's
Yeah.
a bit of a mess. But the result is
Not one bit of problem? No. Is that what you said, not? I'm sorry.
we've had a bit of problem,
Yeah,
but they've all been successful.
yeah,
This usually has to do with educating the taxpayer,
yeah,
and we send out a reminder postcard with the second due date that's now changed.
yeah,
And once 3-4 years have gone by, that's smoothed right out.
yeah,
The banks get it, you know.
yeah. The banks are really
No
good about it.
problem.
Yeah.
Yeah.
So the change of the fiscal year, did you do a 18-month commitment or did you do 2?
They did, in Newcastle, they did a 6/12.
Yeah,
Didn't do any taxes for the 6th month and got down to $27,000 in the checkbook. Couldn't figure out why. And then Somerville did an 18-month. That was also a disaster.
yeah,
But that one was already underway when I got there. And I tried to talk
Did they
about it.
attend the town meeting?
They-
Obviously not.
They didn't communicate it well.
Yeah.
In all the other towns, we've done even, 2 tax bills in advance. Here's what's coming, here's what's coming. Call me. And we still end up with a few, but not many. It's a communication problem more than anything.
Ideally, you would send out, you'd have a town meeting in March, we'll say, and then you'd have one in January or February, maybe even March before that April 1st.
Yep.
And commit your taxes and use last year's valuation. The problem is ownership changes in between.
Care of.
Yeah, creates a headache.
Now, there's always that debate is, if you do an abatement for that 12-month period previous, you continue the abatement on the 6-month one, and I didn't. I used some local home rule discretion and said, we're gonna fix the things that are broken on the 12-month and not repeat them, because it's just a waste of time.
Yeah,
So they're not exactly the same, but
yeah, I
they're
know.
pretty close.
Yeah, and some of them go through the ownership changes and just go care of. They assess it to the previous person, but they send the bill to the care of to the new owner.
Yeah.
There's ways to get around it and to make your life easier for you, but changing your fiscal year does facilitate the cash flow if you send out 2 installment payments. So you're not receiving your revenue in December and January of the following year that you're supposed to be raising money for. And avoids tax anticipation. They must have a good surplus or comfortable that they can run.
In the 3 I did, the way I wanted to do them,
Yeah.
we we maxed out the overlay a little bit. A
Mhm.
little bit more in cash flow. The 6-month was exactly half.
Yeah.
Even though there was no county in the 6-month.
Yeah.
So we built that into overlay.
And when you
It's
do
worked
it,
very well.
Yeah.
Very, very well.
yeah, and when you do a 6-month and a 12-month, the exemptions still stay intact, and you have to send a municipal valuation return stating 6-month commitment at the top. So the Maine Revenue Services can calculate your reimbursements that you would do, because you do your homestead, half your homestead. The mill rate's usually half of what it was the previous 12-month commitment, so you'll get all your reimbursements due to town. So it's imperative that
I explained the differences to Linda Lucas as a little bit of local control magic.
Oh,
It was within a couple.
Yeah.
It's not a big deal.
Yeah, so sometimes she reads everything literally,
Yeah, she does.
and sometimes I have to sit down and have a conversation with her that stop taking everything so literal.
Yeah.
There's a little local control, a home rule attitude here
Right.
for ease of convenience of collecting the money. Says we don't want to send a disgruntled former owner a tax bill and him not forward it to the people that are owning it and are gonna lose their property if it goes to lien. So, just facilitates communication between the town, the municipality, and the taxpayers, which is invaluable.
But some people pass away after April 1st, but before the 6-month, and they're still homestead, but they're deceased, and just go with it, Linda, it's okay.
Okay. Property Tax Division, Maine Revenue Services, which I am now an employee of, part-time. Thank you. My condolences, right? Well, the state tax assessor is responsible for property tax administration, Title 36-301. Municipal tax assessors are agent of the state. I know this gets redundant, but it does go into other related questions that are going to be on the test. So their actions and decisions are governed by the state statutes. Property tax plays an integral role in intergovernmental relationships. The division's primary responsibility consists of administering the annual state valuation program, which I touched on is paramount to ensure that it's equalized and towns are receiving in school subsidy based on their need and their taxable resources. Sometimes it's not based on their need, but their taxable resources, whether they get a lot or a little school subsidy, the county tax, and so forth. The other half of perform the property tax administration function for the unorganized territory and provide technical support services to assessors, collectors, legislators, and other governmental agencies, which I call municipal service, and which I just take a lot of pride in. I used to work many evenings at town meetings and so forth, meet with selectmen at their convenience if they were part-time employees, to explain the laws and their obligations and what needed to be done to resolve any issues that they were having. So the property tax also manages the training and certification program, which here we sit, as well as administering certain taxes such as the real estate transfer tax, commercial forestry excise tax, state telecommunications excise tax. The division also oversees enforcement of the statutory assessment standards, which cover Title 36, 326 through 321. There will be questions in your future on the assessment standards. State valuation grants in aid, a virtual cog and machinery of municipal finance, and for the aid of it distribute equitable. I've already gone over that. Municipalities are required to assess at no less than 70% of just value for property tax purposes, 327. But within that constraint, there are great variability. Through the process called state valuation, the Property Tax Division develops the annual equalized state valuation of every organized municipality in the entire unorganized territory. So I actually, in my past duties, I actually was responsible for developing the equalized state valuation of the entire unorganized territory also, which goes into the county tax. They're self-sufficient, they don't get school subsidy, the unorganized territory. $50,000, I don't think that's on the test state valuation. Base, we covered that. It's gonna be certified by February 1st. Any details on the state valuation are in Property Tax Bulletin 1 on the website, and the rules are in the laws and rules. They're right on there. It's 201. If you really can't sleep at night, you can pull out the rules to develop an equalized state valuation. I guarantee you'll be asleep fast. Okay, publications, a major goal of Property Tax Division is to compile and disseminate current historical information to interested citizens and governmental agencies at all levels. The law book, which it says in mine, the blue book, but is in yours, does it say the green book? Or green volumes? In mine, it actually says, if you can follow my cursor here, that I keep moving around probably like a trying to herd cats, but this blue book of property tax laws, which is now green, is a primary reference supplement to this text. Okay, it's computerized now, okay. Annual statistical summaries, the municipal valuation return, Title 36, 383. We had the tax rate calculator, which is page 10, the last page of that, up earlier, in which is the assessors are required to file annually with the Property Tax Division. is compiled into a statewide statistical summary, which is available on the MRS website. And the way the towns drag their heels, some of them in committing their taxes, if it's the 2017 annual municipal statistical summary, it's not going to be ready until later this summer. Basic courses which we are attending here. Assessment forms, actually rules to develop, to govern the assessment standards since 1979 have been subject to 70%. We've gone over the assessment standards. You know it's in 326 or 320, whatever it is. If you look, yeah. There will be questions about assessment standards. The assessment ratio measures the average relationship between market value and properties as measured by sales price and local assessment of those properties. In general, a property that was assessed for $70,000 but sold for $100,000 reflects a 70% assessment ratio. If the market value of this property is $100,000 and it's assessed for $70,000, typically, and all properties are in a similar range, your assessment level is about 70% on an average. The assessment ratio for the entire municipality determined by the state takes into consideration all arms of like sales of improved residential property in that municipality, the ratio of a municipal taxable valuation into its state valuation, the state equalized measure of the total taxable valuation of the municipality.
That says improved residential property, but the turnaround document asks for all sales, even
Yeah.
land, vacant land
Yeah.
and commercials and stuff.
Yeah.
So it takes,
When vacant land sells in a lot of developing areas or southern Maine, it's usually selling to be developed, so it changes uses. To measure the assessment ratio for state valuation purposes in the rules, it is developed properties. But we do land studies. I do land studies to develop the undeveloped acreage rates for counties in general areas, coastal and non-coastal areas. I've broken it down, and it's got about 5,000 entries. You look at a 3-year period to develop each year, to drop off 1 year, then add the most current after the state valuation audits are done. And before we start out on the next round of state valuation, which would be the 2020 state valuation, because we're coming into 2018 commitments, I will develop an average state valuation land rate for undeveloped acreage. It doesn't always match the towns, because towns have latitude of trying to hit market, but I hit the general geographical market, which varies from Aroostook County down to, it's 10 times. I mean, Aroostook County may be $495 or $500, and Northern Penobscot the same. And down in coastal York County, it may be closer to $5,000 per excess acre, which is the average selling price. So, it's a wide disparity. So to equalize state valuation in those geographical areas, assign that value, that's what we use to extend everything. The state valuation process is an extensive review of the town's local commitment. We break it down into categories and subsets, land, buildings, and personal property, and we apply ratios to those from sales, except for commercial and personal property, if it's within 10% of your certified ratio or your declared ratio. I hate calling it the certified ratio, but I always do. The declared ratio, and it will use the declared ratio on your commercial and personal property, unless you have a significant number of sales that I can develop a sales study on. And that happens in Portland, South Portland, typically maybe Bangor, on a regular basis. It may happen in other communities on a regular basis, but a lot of them change uses, businesses, commercial properties will change uses when they sell, especially with today's economy. And the sales are really not representative of what it was assessed as. Some of commercial properties are either going concerns or they're sold as defunct sales, so it's just really a commercial land and building sale. There may be desperation or non-arm's length. Okay, this says in 1976, the last year before the implementation of standards, the average municipality had a 44% assessment ratio and a quality rating of 42. Quality rating is correct, but that 44% is bunk. It was somewhere around 10 or 20 at the time because they knew the assessment standards were coming. In 2013, and the state valuation was not overly sophisticated back then. In 2013, the average Maine municipality had an assessment ratio near 97% with a quality rating of almost 13. Most impressive is the fact that over 96% of the municipality maintained full compliance with the minimum assessment standards. And a lot to do with that is your homestead exemption. Selectmen, assessors, and the town officials hate explaining why, we'll say there's a $20,000 homestead exemption. Why is mine only, we'll say $10,000? Or we're assessing at 50%, the state won't let us allow anymore, they won't reimburse us. Well, that's not right, I'm losing money. You better get your assessments up. Most towns find it behooves them to maintain their assessment levels. Is less static from the taxpayers, whether it's their homestead exemption, and taxpayers are much more savvy today, especially with computers. You can check on your neighbor's value in most towns, and you can actually see what the market's doing. Most, in the past, a lot of people used to try to intimidate the assessors or the local officials by saying, this is not worth this and never worth this. Now, even if you don't have enough sales in your community, you can go on realtor.com or MLS listserv, MLS sold properties if you have access to it, and you can see what properties sell for in area communities. So realtor.com will tell you what, it used to tell you a lot more information, but I think the listing service said you're competing with us a little bit and how long it was on the market. We're not going to give you all of the information, but in years past there were a lot of information. There's a lot of information online, so taxpayers are much more savvy now. So it behooves towns to have equitable assessments, and these are the facts that were presented, and it proves the case that most municipalities have increase the level and competence of their assessments and the equity levels greatly. Revaluations is or tax equalization programs is the most common use to regain compliance with statutory 70%, that's 327, Title 36, of course, 1. Any revaluation falls under the jurisdiction of the municipal assessors whose judgment, as opposed to the fact of any hired assessor, is final. If you hire a firm and you disagree with their values, the final judgment is the local control. The people who sign the commitment, whether it's a single assessor or whether it is a board of assessors. There's been many revals that maybe were not factored down, but in certain areas were told the following year that they were going to be seeing an increase because when the revaluation came in, they were very, very conservative on, or exceeded the value of certain segments of property. Professional assessing firms performing revaluations in Maine are required to employ at least one certified assessor and must agree to provide the municipality with information necessary to conduct future evaluations, not future revaluations, future valuations or evaluations on property. There must be an instrument left in the town office, and it may be a license agreement to utilize the software, which has to be annually paid. But that is the tool for the assessors to update any assessments if they don't want to employ a contract assessor to do the work, or that revaluation firm in some cases to do that work, which I recommend strongly if you're a small town with, elected officials. Why go in the basement and bang your head against the wall?
Wait, quick question.
Yeah.
So everything that we're not covering today is in the law book, it's just not being explained, correct?
Yes.
Okay.
Yeah. Everything, I'm covering about everything that's in the law course, because no one sat through the law course, and we're gonna review, and mostly on the review, I'm gonna be touching on probably everything you're gonna be seeing
Okay,
in the future.
thank you.
Yeah. I just can't sit up here and only cover 50 questions, or how many questions are there? 50? 50 questions that are on the law portion of the exam. If I did that, I'd be doing a disservice. Because no one raised their hand that they attended the whole course. I mean,
But do you think that actually gotten to most of that stuff? I mean, a lot of us have done the review, just because we haven't sat through the course, we've done reviewing the course book, but,
Yeah.
have we touched upon most of the things that we need to
Yes.
know in our near future already?
Oh, yeah.
We're not doing more.
yeah, you'll be getting a little quiz and everything else.
Okay.
Huh? Boy, it's getting late.
I think that's why we're getting a little nervous.
Yeah.
That we have
This also happens every year, believe me, and the success rate is phenomenal. Yeah.
I hope so.
That's not the way I'm hearing it, based on the fact that we're not here.
Well, let's stop right there. We're getting test anxiety already, I can see that.